this video, we're going to discuss the what, when, and how of refinancing your home. Remember, watch the video to the end and you see how to calculate your own mortgage refinance. So let's get started. What is a mortgage refinance? It's a way to reduce your interest rate and or the term of the loan. This can be very beneficial to either your monthly payment or the amount of time it will take you to pay off your loan. A cash out refi allows you to access the equity in your home. You'll typically have an amount in mind that you need to pay off debts or to do much needed home improvement projects. What you're going to do is you're going to ask for that amount, and then we'll do some calculations and see if your equity in your home supports the amount that you want. Another option is to do a maximum cash out refi. A maximum cash out refi is similar to the cash out refi. But in this scenario, we calculate the absolute maximum you can cash out from the equity in your home. This is a very useful comparison, but sometimes it may not increase your payment much while providing access to the most cash possible. When should you do a refi? Well, if the rates are low, or at least lower than your current rate, that might be a good time to investigate refinance options. If you have a significant improvement in your credit score, that might be a good time to investigate refinance options. If you need cash for home improvement, debt consolidation, medical bills, student loans, or anything else where a lump sum may help, that might be a good time to investigate refinance options. So how do I start the refinance process? Well, it's similar to the process that you would use to purchase a home, but there's no buyer or seller relationship and no realtor needed. You'll need to provide similar information to a home purchase, and getting started with the app is a great way and the easiest way to provide that information. Sometimes the process can be streamlined. You may be able to waive the appraisal and you may be able to get to the closing quicker. It will require your credit score and it requires it to be in great shape. So if you have concerns, you should talk to your home loan advisor first. We can always provide you good advice on how to improve your credit score. Once we have the information we need, we can do the necessary calculations. So let's take a look at those calculations and see how they work. So let's start with a simple rate and or term refinance. So the current property value is $475,000. Your current balance on your mortgage is $320,000. Your current house payment is $2,455 per month. The closing costs, if you were to refinance this home, are going to be about $8,000, and your prepaids are going to be about $4,750. So your new loan is going to equal this loan plus the cost of refinancing your property, and then the term of this loan is going to be 30 years, so we're not changing the term, so this is a rate refinance. The new interest rate is 3.85%. And we calculate the loan to value to make sure that we're not going to incur mortgage insurance, because if we have mortgage insurance, it's going to affect our payment, of course. So in this case, the loan to value would only be 71%. And remember, this is not a cash out. So we're not taking any cash out. We're just refinancing because the rate is lower than the rate that we have. And so what we're going to do now is we're going to calculate our new principal and interest, which is $1,571. And then we have home insurance. These are monthly amounts. So $97.92 for home insurance. That's your hazard insurance. And property taxes, $272.92 a month. No mortgage insurance because our loan to value is lower than 80%. So our principal, interest, taxes, and insurance come to $1,942. Originally, we were paying $2,455. So you can see just by refinancing, we're saving a significant amount of money from what we would have had. Now, let's just calculate our savings. So our savings are equal to this amount minus this amount. So we saved $512.70 a month. So if we do that as an annual payment, we'll say that times 12, And you can see we save $6,000 a year. So that's a significant amount. That makes that refi make sense, and it might be something that you would want to do. Now let's look at a cash out refinance. So again, the property value is $475,000. Our current balance, once more, is $320,000. And then our desired cash. So we want to take out $35,000. So let's assume that we need $35,000 to do some home improvements or to do some debt consolidation, whatever we need that money for. We need $35,000. So we want to see if we can take that out of our equity and what it's going to cost us. So our current house payment is $2,455. Our closing costs, again an approximation, $8,875. Our prepaid's $4,750. So our new loan would be equivalent to the amounts that we have here would be $371,080. Our loan to value, 78%. So again, once more, we don't have any mortgage insurance, so that's a good thing. Our term is still 30 years, but our new interest rate is 3.85. Now remember, when we do these cash out refinances, sometimes the payment can go up depending on how low your interest rate is to get started. But in this particular instance, the interest rate actually provided a good advantage too. So in taking out $35,000, our new principal and interest is $1,739. Our home insurance is $97.92, and our property tax is $272.92. So those are the same numbers that we've used the whole way through. So our principal and interest, taxes and insurance is $2,110. So our payment would be $2,110, and our cash out would be $35,000. So in this case, we're actually paying less, and we're getting a lump sum of $35,000. So our advice would be to go ahead with this refi. And so that's, again, a typical example of how you can end up with cash in hand and actually pay less on your mortgage. Now, if your interest rate happened to be the same interest rate as you have now, clearly you're going to take out money and it's going to cost you some in the payment. So your payment's actually going to go up a little bit. And what you'll find is then you're getting $35,000 of equity out, but your payment may not increase that much. So it's a very low cost of realizing equity in your home. One thing to remember is this principal and interest is a calculation, and the PITI is a calculation. We have a video that shows you how to do that PITI calculation. You can go ahead and watch that one, and you'll see exactly how that's calculated. So let's move on to the maximum cash out refinance. So the difference with the maximum cash out refinance is we're going to take the loan all the way to 80%. So we're going to calculate the maximum that we can borrow based on 80% of our current property value. So our current balance is $320,000, and our maximum loan is going to be $380,000. Now current house payments, the same as it was, $2,455. Our closing costs, our prepaids are all calculated. And so our maximum cash out in this case is going to be $43,295. And that's just a calculation from these simple figures. Our loan to value, of course, is 80%. Our term's going to stay the same at 30 years. It's a 3.85% interest rate. So we calculate our principal and interest, our home insurance, and our property taxes monthly are going to stay the same numbers. They don't change just because we're doing a refinance. And then we add those together. So our new payment would be $2,152, and we could take out $43,295. So we're getting out an extra $8,000, and we're getting that out with still a lower payment than we were paying. So again, we might want to look at maximum cash out refi and take that extra $8,000, which obviously there's lots of things you can do with an extra $8,000 in your pocket. If you have any questions or comments about the calculations, or if you want to get a spreadsheet like this one to be able to do your own calculations, leave us a comment below or follow the links in the description, and I'll make sure that you get a spreadsheet that's similar to this that you can do your own calculations with. Hopefully that helps you to understand the mortgage refinance. If you have questions or comments, please leave a comment below or follow the links in the description. You can find links to my app and how to get started with your home loan or your refinance. So thanks for watching the video, and please consider subscribing. There are many more videos to watch and new ones coming every week. If you're interested in buying a home, if you're a new home loan advisor or an MLO, you can use these videos to get up to speed with how to do the calculations and the things that are important when advising borrowers. So again, give us a thumbs up and subscribe to the channel, and we'll see you in the next video.